Okay, last time we have talked about the job costing, where there are two different ways to allocate the manufacturing overhead to the specific job, right? The first method was called the actual costing, where we apply the actual MOH rate, which is based on the actual MOH incurred divided by the actual quantity of the CAB used across different jobs. And then we specifically allocate based on this actual MOH rate multiplied by the actual CAB used for that specific job. So it looked quite straightforward, but you need to keep in mind that there are some problems associated with these actual costing, which is that it is time inefficient. Managers have to wait until the fiscal year end to know both the nominator and denominator, right? And sometimes you want to calculate the actual you want to calculate the MOH at a weekly or monthly level. For example, if you want to charge your customer, right? Then the weekly or monthly MOH rate under the actual costing can vary a lot because of a high variability in the numerator or denominator, right? To address that issue, managers can consider using what's called the normal costing, which is calculated based on a predetermined MOH rate to allocate the MOH, right? So basically, the only difference between the actual costing and the normal costing is how you apply the MOH, right? Instead of using the actual MOH rate, you can apply what's called a budgeted MOH rate or the predetermined MOH rate that is established at the beginning of the year, right? So we have looked at several problems. And then I have briefly mentioned how to record costs in a journal entry. So I'm not gonna repeat this, but one of the important thing is that when we are using or requisitioning the materials, the direct materials goes into the working process while the indirect material cost goes into the manufacturing overhead control. That's same is applied for the direct labor and indirect labor. And we need to allocate the manufacturing overhead, right, by debiting the working process and crediting the MOH allocated. And MOH allocated is a contract count that decreases the value of the MOH control. Okay. So these were some transfers. And I've also talked about three different ways to account for the underallocation or the overallocation of overheads. The first was the adjusted allocation rate approach. This is nothing more than um, replacing the budgeted MOH rate with the actual MOH rate, right? And one of the innovation with this approach is that you can apply this calculation to each specific job, right? As you can see below, right here. If you are in a big company where you have a sophisticated computer system, this can be easily applied, right? But many cases, you may think it is costly to allocate based on each different specific job. So why not just use a more simple method, which is the proration method approach, where you spread the under or over allocated MOH along these three accounts, which are work in process, finished goods, and the cost of goods sold. So I've mentioned that the objective of this proration approach is just to adjust the general ledger to the actual overhead rate, right? And this is just for the financial reporting purposes, not for showing, reflecting the actual consumption of each account, right? There were two ways of prorating to WIP, finished goods, and cost of goods sold. So the first one was based on the MOH allocated prior to proration. And the other way is to use the ending balances of the work in process finished goods and the cost of goods sold prior to proration. Right? There is a more straightforward approach to account for the underallocation or overallocation, which is called the write-off method, right? The COGS write-off method. For example, if there is underallocation, then you would debit the COGS, right? If there is overallocation of MOH, then you would decrease by that amount. So you would credit the COGS. So this was one example of how you can adjust for the underallocation of $135,000. And also, just like the proration approach, write-off method is just for the financial reporting purpose. It does not reflect the actual consumption of the MOH among the COGS account. Okay. So that was pretty much it for the job costing. Today, we are going to look at the ABC. So ABC is a more sophisticated approach to allocate the manufacturing overhead to different jobs. So I'll get to it soon. Let's look at a very simple job costing scenario, right? Let's say these four people, Emma, James, Jessica, and Matthew, are having dinner and they are consuming different amounts of entree, dessert, drinks. So the total consumption are the following, and the total amount that they have to pay in lump sum is $108. And then here, one of these four people suggests why not split equally, right? So in a managerial accounting sense, that is called the broad averaging, where you split the cost evenly. It's also called the peanut butter costing. So when you spread the peanut butter on bread, it's usually spreaded equally, right? So many times you can use it in a same context. So when you're using the peanut butter costing in this scenario, how much each person pay for the dinner? Well, basically, you would divide that by 4. So the average cost each has to uh, pay is $27. So in terms of Jessica, $27 is equal and it's a fair amount that she can pay because that's how much she has consumed, right? But for Emma and James and Matthew, they are either paying more or less than what they have actually consumed. Especially for James, he is actually being favorably treated, right? He has consumed $42 and in fact he's only paying $27, right? So in that sense, in a managerial accounting, James is paying less costs, and we can say he is undercosted. But on the other hand, Emma and Matthew, they are paying more than what they have consumed. And in a managerial accounting concept, they are overcosted. So they're paying more cost than what they are actually consuming. So as you can see from this scenario, broad averaging or the peanut butter costing actually leads to either the undercosting or the overcosting of a cost object. Let's say it's a product or services, right? So product undercosting is when the product is reporting a cost that is below the cost of the resource that the product has consumed. So basically, the cost that is reported is less than the actual consumption. Okay. On the other hand, the product overcosting is when the cost is reported above the cost of the actual consumption of resources of the product. Okay. Then why is it so important to have a accurate costing rather than under or over costing? Well, costing is pretty much associated with pricing, right? Basically, if a product is undercosted, meaning if the product is reporting a cost that is less than actual consumption, then that can lead to the underpricing of the product. If the product is underpriced, then that means basically the revenue is even below the cost of the resources. Okay, so it can actually lead to a negative profit from this product because it's not accurately priced, right? However, the problem with the overcosting. Well, the overcosted products again will lead to the overpricing, right? So overpricing means that consumers are paying more than what they actually have to pay. And if there is a similar product in the industry and competitors are selling at a more competitive price, consumers will actually pay for the competitor rather than yours, right? So that can actually lead to a decline in the market share compared to the competitors selling similar products, right? So because of the decline in market share in the long term, it can also lead to a decline in your revenue and therefore lower profit from the product. So either the undercosting or the overcosting can actually detriment your competitiveness. And when there is undercosting or overcosting, there is always an issue of the product cost cross subsidization. So what does it mean by subsidization? Subsidization basically means when a certain party A subsidizes, helps uh, the certain other party B, right? So party A is sort of sacrificing for the benefit of the party B, right? Either one of them is sacrificing. So for example, if a company undercosts one of the products, it will always overcost at least one of their products, right? And similarly, if there is an overcosting, that means that there is some other products that are benefiting from it and therefore being undercosted, right? Then when does the cross subsidization happen? For example, when the product is overcosted, basically the overcosted product is cross subsidizing the undercosted products that are benefiting from this system, right? And cross subsidization is a very common, and I would say almost near 100% happening when the cost is broadly averaged. So in a case of this dinner splitting, who is cross subsidizing whom? So in this case, Emma and Matthew, as I said, are overcosted, right? Because they are spending more than what they're actually consuming compared to James that are undercosted. So basically, Emma and Matthew are cross subsidizing James. Now, let us look at some limitation of simple job costing system with the example of Plaston Corporation that manufacture lenses for the rail taillights of the automobiles. In order to manufacture the rear taillights of the cars, let's say there are two different products that are provided, which are simple lens S3 and complex lens C5. Okay, so basically the simple lens is more straightforward and more easier to manufacture with simpler components compared to the complex lens where you need more sophisticated components. And the Plaston company is just a normal company, manufacturing company that follows the sequence of the normal business operation where they design products and processes, manufacture lenses, and distribute those lenses to possibly the corporate customers, right? And in order to charge their corporate customers, Plaston Corporation has to first know how much cost they are consuming to manufacture either simple lens or the complex lens. So what they do is they want to calculate the cost by these 6 steps. Okay, so the step one is to classify cost into the direct and indirect cost. The reason why they classify in this way is because they want to trace the costs that are traceable first, and then figure out how they can manage with the indirect cost. Right? So in step two, they will trace those direct costs, right? Step three is where they now allocate the indirect cost to different products. Right? So basically, they choose the direct labor hour, the DLH, as the cost allocation base, where they think the labor hour is the reasonable driver for the manufacturing overheads. So in total, let's say the budgeted amount of the labor hour is 39,750. Okay. And in step four, manager chooses one cost pool of the MOH where they are allocated based on the labor hour, and the total budgeted amount is $2,385,000. Okay. In step five, they calculate the predetermined MOH rates under the normal costing, right? So then it will be $60 per DLH by dividing the $385,000 over 39,750 labor hour. Okay. So $60 is our predetermined MOH rate under the normal costing. And that is used in step six, where they allocate the MOH to each types of lenses based on this predetermined rate. Okay. That is also shown here on the right-hand side graph for your reference. All right, so let's say that 60,000 units of simple lenses are manufactured and 15,000 units of complex lenses are manufactured. Okay. And as said earlier, in step one and step two, where they trace the direct material and direct manufacturing labor, this is what each lenses are consuming and are absorbing. In terms of the indirect costs, they are allocated based on the labor hours, right, of the $60 per labor hour, right? So regardless of how much they actually consume the indirect cost, the allocation approach is basically only based on how much labor hours are consumed for different types of lenses, right? So this is what you get. And on the right-hand side column, you see the per unit basis cost. In total, the unit cost of simple lenses is gonna be $58.75, whereas complex lens is $97 per unit. So on the surface, you can conclude that it is more costly to manufacture one unit of complex lenses, right? So it seems quite reasonable. But then let's say there is a competitor called Bendix, and Bendix produces a lens that is quite similar to the simple lens. So they are called L3. And what happens is that the selling price of the Bendix for L3 is 53, right? If you compare that with the cost of S3, 58.75, it's much below the cost, right? And of course, from the Plastin Corporation perspective, they cannot charge consumers below 58.75. Otherwise, they will lose profits, right? So they have to impose a price that is, at the minimum, $58.75 or greater than that. So in order to be competitive in the market, Plastin Corporation tried to consider the possibility that The S3, the simple lens, is overcosted, and C5 is undercosted, right? In terms of how they are allocated the manufacturing overheads. So managers want to refine the costing system, and they want to know what possible options there are. So before that, in a general concept, let's look at why managers need to refine the costing system. So as the time evolves, the necessity for refining the cost system is becoming greater. And one of the reasons is because the products and services are becoming more diverse than ever before, right? And also, many people are wanting the customized products, right? Not only the diversity, but the customization of products can lead to different consumption of resources, right? And even for, let's say, packaging of coffee, there are so many different ways to package coffee, right? Either you can package in a K cup, as you see on the right hand side, or a K pod, and in each different way, different types of resources are consumed. I mean, when I talk about resources, I am mostly talking about the manufacturing overhead resources. Right? And second, refining costing system is becoming more important than ever because in terms of the total indirect cost compared to the total cost, it is increasing. That is the trend. And one of the reasons is because the labor costs are declining, right? Many people are now becoming replaced by the automated machine. Automated machine are usually controlled by the supervisors or somebody, that at a higher level where they are usually paid the indirect labor cost rather than the direct cost, right? So as there is an advancement of products and processes technologies, there is, comparatively speaking, more indirect cost compared to the direct cost, and therefore it is important how we can allocate in a refined way. Third, this has to do with the case with Plastin versus Bandit, where where there are a lot of competition on the product markets. You want to stay competitive. In order to have competitive price, you need to know the accurate cost information rather than allocating costs in a simple way, right? Then you may wonder, okay, if refining a costing system, if a sophisticated costing system is better, then why not just use complex system from the beginning? Why do we have to start from the volume based one single plant wide rate and departmental rates if there is a more sophisticated way to allocate costs? Well, there's always this trade off between simplicity and realism, right? Sometimes, if you're in a really big company, you don't want to be too much fixated on how you allocate your manufacturing overhead resources. There are much more, I would say, much more sophisticated decisions you have to make beyond how you allocate manufacturing overhead. So you want to keep it really simple and consistent, right? But at the same time, if you are keeping that simplicity, you are becoming far from realism. That's something that you're sacrificing. On the other hand, you want to be more realistic. You want to keep the cost as accurate as possible, right? But then the another problem is it's gonna be really complex. You have to always keep track of what kind of resources are used, how much resources are used for different type of products. Let's say you're in a really big company and you're dealing with hundreds and thousands of product types and there are so many different resources consumed for these so many different types of products. Then can you really keep track of all those resources? Well, I guess Of course, you can, but that would be really time and cost inefficient, right? There are, broadly speaking, three ways to refine the costing system. The first is, why not make the cost more traceable? I said that direct cost itself is some kind of it's not a objective definition, right? Sometimes direct cost can be traceable, but I've said that one of the important criteria is that it should be economically feasible, right? The benefit of tracing cost should be greater than the cost of tracing, right? That is the meaning of economically feasible. So how about trying to make costs more economically feasible and try to have them as traceable as possible so that you can reduce the total amount of the overheads, right? In that way, you can reduce the subjectivity, right? Second is, instead of just having one single cost pool, how about we expand the number of indirect cost pools, right? Basically based on how the MOH varies. It can vary with the labor hour for sure, but sometimes it can vary with, let's say, the number of machine setups or the machine hour instead of labor hour or the units produced, something like that. So it can be divided based on what is a more reasonable cost allocation base. Third is, try to use the cost driver as the cost allocation base. So I've said that cost driver is not necessarily equivalent to the cost allocation base. Cost allocation base itself is a more subjective meaning, subjective term, where the managers can subjectively choose the factor based upon which they can allocate the manufacturing overheads. The cost driver, on the other hand, is more of a fact. That is a factor that drives up the cost, right? So desirably speaking, the cost driver should be used as a cost allocation base to accurately identify the cost. Of course, realistically, there are many overheads where cost driver is not really clear, right? So one of the best practice is to use what's called the ABC, or the activity-based costing system. So what is exactly the activity-based costing? Well, in activity-based costing, the indirect costs are basically identified based on different individual activities. Individual activities have usually different um, consumption of resources and different allocation bases. So on the left-hand side, you see a traditional job costing system where you have only one single allocation base, such as the labor cost, and that is used to allocate to different cost objects. But under the ABC, you can first identify what are different types of activities, right? Like the setup cost, or there can be production itself, testing. So all these activities are usually identified based upon what their allocation bases are. For example, the setup, the cost of a setup, machine setup, usually would incur not with the number of units produced, but usually the machine setup would incur in a batch of products. When I mean by a batch of products, I mean by, for one batch, there can be 100 units of products or 200 units of products. It's kind of a group of products altogether that is prepared for one machine setup. Okay, so the cost of setup would usually incur not with the number of units, individual units produced, but rather number of batches that are prepared to set up the machine. Okay. How about the cost of a production? Let's say this is a clothing company and it is more labor intensive rather than machine intensive. So the cost of production would usually vary with the labor hours used, right? So then the right allocation base is the labor hours. Testing. The cost of testing usually would not necessarily vary with units produced, but rather based on how many tests are initiated, right? What I mean by test, it means, for example, if we are in a car manufacturing company, you would need to do the testing on how well the car has been manufactured, right? There can be some defects, so you have to test whether the car is um, well manufactured. In that case, the testing would usually vary with how many number of tests you initiate rather than how many units you produce, right? So that is going to be basically the allocation basis used. And the way you allocate to different jobs, different cost objects, in this case, is pretty much the same. Just one difference is that here in the ABC system, instead of having just one allocation rate, there will be multiple allocation rates based upon which you allocate to different cost objects. So this is basically how different the ABC is compared to traditional job costing system. So here you see a graph where on the x-axis you see the number of cost pools, and on the y-axis you see the level of complexity, right? So the first traditional costing system that we focused on was the plant-wide overhead rate, the single overhead rate. And then we looked at a little more sophisticated overhead rate, which was the departmental overhead rate, right? Like the assembly department versus the molding department, let's say. So the more cost pools are used and the level of complexity. Level of complexity usually would mean basically that you apply different allocation basis to different cost pools. So the more refinement is done in the ABC, right? It's one of the most complex systems with a lot of cost pools, depending on what types of activities are consumed, right? So under ABC, each cost pool is called the activity pool, activity cost pool, and it has their own unique measure of activity, right? Like, let's say the setup cost pool or the testing cost pool, production cost pool. While the traditional costing system usually rely on the volume-based drivers, right, like the how many units are produced, ABC does not necessarily rely on volume measures, right? It can be based on number of tests, the number of batches, or the number of setups, etc. So the key essence here is that the ABC uses much more sophisticated cost pools, right? And each cost pool should have different measure of activity. And rather than just focusing on the volume-based measures, they can use time-based measure, which is also called the duration based drivers, or it can be based on the transaction, the number of transactions. So that's called the transactional driver. So again, under the ABC, you need to first identify the activity that is consumed for different types of cost objects. So activity is basically the event that causes the consumption of overhead resources, right? And for each activity, there should be the activity cost pool, right? This is nothing more than the cost pool that we looked at under the normal costing. But one difference is that this cost pool is basically divided based on how many activities you have, right? And for each activity, there is the activity measure, or let's say the allocation base, right? And many times the cost driver itself should be used, meaning the the factor that drives up the activity cost is the reasonable activity measure. Okay. Now in under ABC, cost hierarchy is used in many times. So cost hierarchy kind of categorizes various cost pools on different types of cost drivers, or the level of difficulty in determining the cause and effect or the benefits received relationships. Okay. So basically, these first two are categorized based on the cost drivers or the cost allocation basis. So the cost that varies with either the unit of outputs produced or the cost that varies with the batches of products. But for all other costs that are not necessarily varying with the units produced or batch of products, they are called the sustaining costs, the cost that would sustain either a product or the facility, right? So if the cost is primarily sustaining and maintaining, supporting the product itself, it's called a product sustaining costs. On the other hand, if the cost is not necessarily just supporting the product itself, but the facility, then we say it as the facility sustaining cost. The more down you go, the more difficult it becomes to determine what is the actual cause and effect, or who is benefiting who. Okay, so the difficulty in determining these relationships become even harder as you go down. Okay. So to look at each type of cost deeply, output unit level cost is again the cost that vary with the individual units of products, right? So one of the example would be the indirect manufacturing labor cost that would usually vary with how many units are produced. Okay. Batch level cost would usually vary with the group of units of products rather than just a single individual units of products, right? Also, again, the cost of setting up machines, or when you're setting up and preparing machines, you just don't prepare for one single product, but you would prepare for a batch of products altogether, right? They are called setup costs, and setup costs would usually vary with this number of batches. So the output unit and batch level are somewhat clear. They have a quite clear relationship between no cause and effect relationship or the benefits received, or both. It has a more straightforward relationship between the consumption users and the manufacturing overheads. But sustaining costs are much less clear, right? The product sustaining or the service sustaining costs are the costs that support individual products or services. It does not necessarily change with units or batches of products produced, right? So let's say the cost of designing a product. Cost of designing a product itself is a manufacturing overhead, but it's not necessarily related to how many units you produce or how many batches of products you are preparing for a machine, right? Not necessarily so. Then how can it be categorized? So it is basically the cost to support the product itself, right? So that's why it's one of the product sustaining costs. Facility sustaining cost is a cost that has much less clear cause and effect relationship, and it does not necessarily support a single product or services, but it supports the organization as a whole, right? So let's say the utility expenses or the administrative costs. These are all costs to support the overall organization of a company rather than a product itself, right? So cost hierarchy is a cost concept that is used usually under the ABC system. So I want to briefly mention the batch level activity. Um, Again, the batch itself means when you are lumping multiple units of products or services into one group, one chunk. For example, when you are baking an eel, as you see on the left hand side, you don't just bake one eel at a time, but those eels are fried once all together. So let's say 20 eels are fried at once, one plate, using one big brazier one time, right? In this case, one batch would necessarily mean 20 eels that are baked uh, at one time. Ceramic baking activity is also based on batch level rather than based on a units of ceramics baked. Because when you are baking ceramics in a kiln, you don't bake just one single ceramic, but you bake, let's say 20 or 30 ceramics all together within a kiln at a time. Therefore, one batch would refer to these 20 or 30 ceramics baked all together within a kiln. Okay, so when we are computing and estimating the cost of baking ceramics, you would not necessarily um, estimate those costs based on each single units of ceramics baked, but rather based on how many batches are baked. So this is kind of a repetition of what I've shown you. Then how can we implement the activity-based costing, right? So first you need to define what types of activities there are and what are the associated activity cost pools. Activity measure is nothing more than the activity rate that we are going to apply for different activities. And then our job is to assign these overheads to each activity cost pools, calculate the activity rates, and then assign these overheads to cost objects using the activity rates. And last would be to prepare the management reports under the ABC. So, for example, let's say there is a big chunk of overhead cost, and under the first stage allocation approach, we are interested in dividing these overhead costs into different types of activities. And for each different activities, different types of resources are consumed. Okay. So let's say there is a cost of customer orders, design changes, the order size, the customer relations, and there can be some other overheads that are not necessarily easy to classify. So they are called others. And then you would just use the same allocation rate. Under the second stage allocation, we are interested in using a specific activity rate for different activity cost pools, right? For example, for the cost of customer order, let's say that would vary with how many orders are issued by different customers. Then we can probably allocate based on the number of orders for different type of cost objects. Right? When we talk about cost objects, it can be at a departmental level, it can be at a customer level, customer order, or products, right? And then, of course, there can be some unallocated portion where we classify it as unallocated. And this is a portion that the organization as a whole would bear, not necessarily allocated at a product level or a divisional level. Okay, so let us come back to the simple lens and complex lens case. And managers want to refine their costing system, right? And let's say that the focus on this focus of refining is related to the setup cost, the cost of setting up machines. Let's say, suppose out of the $2,385,000 of manufacturing overheads, $300,000 are related to the setup costs, right? And we are only interested in how we can refine allocating the setup cost of $300,000. Based on our prior knowledge and manager's intuition, the complex lens C5 is much more complex to produce, and they also believe that cost of setting up machines for this complex lens is greater than cost of setting up machines to produce much simple lens that requires less sophistication and less components, right? So managers believe the setup cost of C5 should be greater than the setup cost of S3. If you recall from a previous case where they didn't apply refined costing system, firm decided to use the manufacturing labor hour, the DLH, as the cost allocation base, right? So the $300,000 of setup costs were allocated based on the labor hour used for each type of lenses. That was the simple job costing system approach. But rather than that, they want to now apply the ABC system, and they think that the right allocation base is not the labor hour, but it is rather the setup hours. Okay? The setup hour is a little bit more refined measure than the number of batches because it also considers how many setup time it requires for each batch. Right? So for example, when we are manufacturing the simple S3 lens, the number of batches are gonna be 250 and the setup time for each batch is 2 hours. So the total setup hour is gonna be 500 hours. Whereas for the complex lens, the number of batches is gonna be 300 with the setup time per batch being 5 hours. So the total setup hour is going to be 1500 hours. Right? So then applying the setup hour as our allocation base, our activity rate under the ABC is going to be calculated based on the $300,000 over the total setup hours used across these two different lenses. So that's going to be 2,000 setup hours. So this basically means that they're going to allocate the setup cost to each type of lenses on $150 per each setup hours. Okay. Now let's come back to comparing between the simple versus complex lens when they apply the simple job costing versus the activity-based costing. So in a traditional sense, in a traditional simple job costing, we applied this 7.547, which is the allocation rate per the direct labor hour, times each labor hours used. for each types of lenses. Okay. So under the simple job costing, simple S3 lens is bearing more set of costs compared to the complex C5. But what if we apply set of hour instead of the DLH for the set of cost? Then in that case, as we've seen from the previous slide, the activity rate was $150 per set of hour, with the 500 set of hour being the set of hour of the S3. So we multiply by 500 and we get $75,000. On the other hand, for the complex lens, we can multiply $150 per set of hour times the 1500. Okay, so this should be not 15,000, but 1500. One less a zero, right? Oops. To $25,000. So let's say if the activity-based costing allows these two types of lenses to be accurately costed, then under the simple job costing, which type of lens is overcosted versus undercosted? So if the ABC, this cost is assumed to be accurate, then simple S3 lens is being overcosted when we apply simple job costing, and complex lens is being undercosted when we apply the simple job costing, right? So ABC allows both type of lenses to bear the accurate consumption of each resources, leading to a more accurate costing and therefore more accurate pricing of different types of lenses, right? So I've just shown you one type of activity cost under all these different indirect costs for simple and complex lens, right? So in the end, let's say when we divide into each type of activities and we apply the activity rates to each type of lenses, this is the total refined cost, right? So if we compare this final number with the unit cost under the job costing, the cost of S3 now decreases from 58.75 to 49.98. And the cost of C5 increases from $97 to $132.07. Right? So then the question is, if we now refined the ABC system, can we now properly compete with the competitor Bandit with a price of 53? Well, there's no clear answer, but we can probably say they do have a possibility to compete, right? As long as they can keep their price between 49.98 and $53. But of course, not more than $53, because other than that, they wouldn't be able to properly compete with their competitor if they are purely competing on the price, right? So, of course, it's not a direct no, as we have seen from the earlier slide, but here we can possibly say they do have the possibility to compete with Bandit, as long as the price is within this range of $49.98 and $53.